This is Vasagi, faculty from Dept. of Commerce. The topic to be discussed today is depreciation accounting. Depreciation means it is continuous reduction in the value of the asset. Asset in the sense we have both current assets as well as fixed assets. But this depreciation is to be charged on fixed assets only, not on the current assets. Current assets are the assets which are easily converted into cash. Current assets we don't charge depreciation because their less investment will be there compared to the investment in the fixed assets. Fixed asset, the investment what we do, we call it as capital expenditure. Capital expenditure means huge investment will be there. For example, if I go buy a mobile today, the value will be in reduction. If I go and sell it to the same seller, he will accept it for the less amount because there is a reduction in the value. This is called depreciation. When we talk about depreciation in the accounting system, we have reduction in the value means we say it is depreciation, depletion and amortization. Depreciation means it's the reduction in the value of the fixed assets. That's what I told you. It is the fixed assets like building, machinery, plant and machinery, furniture, etc. Depletion means it is in the reduction in the value of the natural resources like this coal mines, etc. Next we have amortization. Amortization means the reduction in the value of intangible assets. Tangible assets means those are fixed assets like we can touch, feel. Those assets are called tangible assets. Intangible assets means it is the which we cannot see, which we cannot feel, you call it as intangible assets, and those are goodwill, patents, etc. So why this reduction in the value of the asset? Because of the continuous use of the asset, because of the time, and because of the change in technology, there is reduction in the value of the fixed assets. And it is very important that depreciation has to be charged on the fixed asset. Why means depreciation is a loss. It is a loss which has to be made good by the by our P&L account. So when we charge depreciation, the accounts which is being affected are the depreciation account, machinery account and the profit and loss account. And what are the causes for this depreciation? The causes for the depreciation is lapse of time, because of the time what the asset today, because it is there with me for a long time, it will not have the same value. So you call it as because of the lapse of time. Wear and tear of the asset, continuous use of the asset for whatever purpose. In the business we use it for production, or they use it in the business for earning profit. So in that case it will be continuously used in the business, and because of that wear and tear will happen. So depreciation is an indirect expense. So because of the indirect expense, it will be charged to our P&L account. If it was a direct expense, we would have charged it to our trading and trading account. And next is obsolescence of technology. As we know that the technology is improving day by day. What the technology today, it is not there tomorrow. For example, the mobile only, what the features it has today, tomorrow it will not have the same features. So every day the technology also is changing, and what the machine which is used today in the organization, after 10 years it will be outdated. So you call it as so they would have charged depreciation and it would have reduced its value because of the obsolescence. Next, it is for the because of decrease in the market value. If the asset has less market value, the depreciation is being caused. Next, the objectives of providing depreciation. Why should the depreciation be provided? Why should we charge depreciation? Why a business charges depreciation? It cannot charge also. Why should we charge depreciation? First is to know the true results of the company. What the company or the organization, why it prepares its final accounts is that it has to know the true profit and loss of the organization. Until and unless we charge depreciation, we will not know what is the true profit, because depreciation is an indirect expense. So to ascertain the true profits of the business, depreciation has to be charged in the organization. And also to know the fair value of the asset. What is the value, current value of the asset is determined when we charge depreciation every year, and the true value is determined after charging depreciation. Suppose if I have to sell an asset, after charging that year's depreciation only the asset is being sold. Always depreciation is charged at the end of the year. So if the asset is being sold in between the years, also between the current year, the depreciation is charged, then only the asset is being sold. To know the correct value of the asset, this depreciation is charged. And to accumulate funds for replacement, as we all know, the asset, when it is used in the business for a longer time, it will become a scrap, because it becomes outdated. Whatever the technology it's come new, it cannot be used. So if the machine is very old machine, and after a long time the value of the machine comes down, and this machine has to be replaced. So what some organization do, whatever the depreciation is charged in the business, same amount of fund is created, and they buy a new asset. Because when a fixed asset is bought to the company, it has longer value, and huge investment has to be made. For the huge investment, what the company has to do, it has to invest somewhere. So when depreciation is charged, some company follows the companies follows different types of depreciation. In that case, if they have the fund, depreciation fund, they can replace the asset by buying a new asset. Next, to ascertain the cost of production, as I told you, depreciation is an indirect expense. How will you determine the cost of a product? The cost of a product is determined, the value of a product is given by the cost. So depreciation also becomes a cost, and it is one of the factor for determining the cost of production. Next is the factors affecting the amount of depreciation. How the depreciation is determined? So what are the factors which affect the depreciation? First is the cost of the asset. Depending on the cost of the asset, the determination of depreciation is done. Next, the expected life of the machine or the asset. The expected life is being, if it is determined, this is the factor, one of the factor which will say what will be the depreciation. Next is the estimated residual value. That means after so many years, whatever the scrap value or the residual value, whichever is remaining, that will determine the factors of the amount of depreciation. These are the factors of the amount of depreciation. Next, the objectives of depreciation. Objectives, what is the need or idea behind charging depreciation? First, one more thing is that, first thing is that to know the true value of the fixed asset. We all have seen, to know the cost of production. Next, the asset, if the depreciation is not charged, the asset will show more value. The asset will be overstated. So at the end of the year or end of the financial year, the asset should not show the value which is overstated. So when we charge depreciation, the asset will show its true value. Next, because of the Companies Act, according to the Companies Act, there is a provision that all the assets have to be charged depreciation. So in that case, the depreciation is a compulsory aspect wherein the company has to charge depreciation. Next, we have different types of methods or types of charging depreciation. First of all, we have straight line method, diminishing balance method, annuity method, sinking fund method, insurance policy method, revaluation method, and now some new methods are adopted. But usually company, they just follow the straight line method and the diminishing balancing method, which is very easily adaptable. So what is this straight line method? Straight line method of charging depreciation is that a fixed amount of depreciation is charged every year on the asset. So suppose if the asset value is 50,000 rupees, every year, suppose if it is 10% depreciation, on that 50,000, 10% depreciation means it is 5,000. So a fixed amount of 5,000, 5,000, 5,000 is being charged every year for depreciation. So this is called a straight line method of charging depreciation. So next is the diminishing balance method of charging depreciation. Under diminishing balance method, how the depreciation is charged is that on the reducing balance of the asset. Suppose the asset is first year it is 50,000. The asset is purchased for 50,000 and 10% depreciation means 10% it comes to 5,000 rupees. So the next year we need not charge the same depreciation. What we are supposed to charge is 50,000 minus 5,000 is 45,000. It has reduced its value. You call it as it has diminished its value to 45,000 in the next year. 45,000 you have to charge 10%. So if I charge 10% on that 45,000, it is 4,500, and the next year the value will be, if I charge 4,500, the value will be next year it is 40,500. On that if I charge 10%, it will be 4,050 rupees. So the value, the value diminishes, on that balance the depreciation is charged. This is called diminishing balance method of charging depreciation. Next is the annuity method. Annuity method, how they charge depreciation is that they assume that depreciation is an investment on fixed asset treated as investment. So in that case, if I charge depreciation, the depreciation plus investment, they charge some interest. So depreciation amount is not only the depreciation but also interest is added up. But this interest is not actually receiving or giving interest. This interest is added to the depreciation for only the book purpose. So this method of charging depreciation, you call it as annuity method. Next is sinking fund method. Sinking fund method or depreciation method. Before itself when I told the depreciation fund is being created. Why this depreciation fund is created is that when depreciation is actually a loss. When this loss is created, this loss is made good by our profit. That is, from the gross profit we can make good this loss. So this depreciation loss, whatever the depreciation loss, what they do is that they create a fund, the amount of depreciation amount, they create a fund and they deposit in that depreciation fund account. Later on, what has been created, every year they invest it on securities. That is, when they invest on securities, what happens after some years, the asset value becomes zero or asset becomes scrap. That time what they do is that whatever the fund is being created, they would sell those securities which from the fund they have bought. They will sell the security and buy a new asset. So this is an advantage of keeping the sinking fund type of depreciation. Next is insurance policy method. This is like taking up the insurance. When we take up insurance, what we do, we usually pay premium and go on. But in the case of depreciation, what the company will do is that they will have an agreement or contract with the insurance policy people, and how much the amount of depreciation is being created, that much amount will be deposited as premium. After the asset becomes a scrap, till that amount the insurance policy will be taken. After that, the asset becomes zero. What they do is that from that insurance policy, they would buy a new asset. This is called insurance policy method. Next is the revaluation method. Revaluation method is a method wherein the opening balance and the how they charge depreciation is that the opening value of the asset and the closing value of the asset they take out, and the difference is the depreciation. These are the different types or methods of charging depreciation. So what is the difference between this? Usually the company nowadays they just follow the straight diminishing balance method, because most of the companies they follow this diminishing balance method. What is this difference between straight line method and the diminishing balance method? I had explained. It is straight line method, you charge the same depreciation on the original cost. On the original cost you charge the same depreciation and go on, whereas in diminishing balance method you charge the on the remaining balance you charge the depreciation and go on. Why we create this depreciation is that when the asset is being sold, if we charge depreciation, we come to know that whether the asset is sold for a profit or a loss. Suppose in straight line method 3 years depreciation you have charged, the asset 50,000, 5,000, 5,000, 5,000. If I charge the depreciation, the asset value becomes, at the end of the third year, the asset value becomes 35,000 in straight line method. When I sell an asset for 30,000, there is a loss of 5,000. So when I charge depreciation, I come to know that there is a loss of this 5,000. So depreciation is a loss which is charged to P&L account, whereas this loss which is being created, that loss also is charged to P&L account. In diminishing balance method, we charge it on the diminishing value. That is, first year I charge 5,000, the next year I charge depreciation of 4,500, the other year I charge 4,050. When I sell my asset, the asset value becomes 36,450. When I sell my asset for 30,000, 6,450 is a loss. So see the difference here, 5,000 will be a loss in straight line method, whereas 6,450 will be a loss in diminishing balance method. So it is always better when we charge depreciation, because there the value goes on diminishing. As the value goes on diminishing, on that basis the asset is being charged depreciation. Finally, the depreciation are charged in two types. One is that depreciation is charged directly to our machinery account, and next it is posted to our P&L account. Now there is another version is that we can have a provision to charge depreciation. With provision you can charge depreciation, and other one is that without provision you can charge depreciation. Without provision, the accounts affected are the machinery account, the depreciation account, and the P&L account. You charge depreciation to your asset account, and finally there is the asset value. Whereas in our when we have a provision, what is this provision? Provision means it is an amount which is taken and kept aside to charge depreciation. It is taken and kept aside. So provision, when we have a provision of charging depreciation, the asset account is not affected. The account affected is the provision for depreciation, depreciation account, and these two are only affected. The machinery account or the asset account is not affected. So these are the two provisions. One, we have a provision of when we have a provision, and if you don't have a provision. Concluding, what I have to say is that in the organization, the fixed asset has got a longer value and it has got lots of investment on it. and because huge investment or capital investment is made, depreciation value is very much necessary, because when we have this income tax, when we talk about income tax, depreciation is an admissible expense in our income tax. Suppose if I have to pay 50,000 income tax and I have a depreciation of 30,000, it is an admissible expense. 30,000 is being deducted and I have to pay income tax only 20,000. So there is an advantage of if a company charges depreciation on the fixed assets. So to conclude, this is that depreciation has to be charged for the fixed assets, and different company follows different types of depreciation. Thank you.